talk a little bit more away from the REIT and maybe more about the Tryperion
Mm-hmm.
fund, because I think that's really the meat and the heart of what a lot of folks are going to be interested here. And as I mentioned earlier, if folks want to ask Eliot questions directly, just kind of raise your hands, and we're happy to incorporate. And I'll do just a quick commercial here for who we are, since a bunch of other people joined. This is the CRE Equity Markets Monday Hour. Today we're thrilled and honored to be joined by Eliot Bencuya from both Tryperion and Streetwise. And Eliot's a JV and pref equity provider in the $3 million to $15 million space. So Eliot, tell us a little bit more about what's interesting to you guys right now, maybe both from a market perspective and an asset class perspective, in
Yeah.
what, at least to me, from the capital advisory standpoint, feels like a pretty dynamic and pretty fast changing market.
So I think that's exactly right. I mean, you can have this conversation every 30 or 60 days, and it changes pretty quick. So,
Good. That
last
will give me more reason to do more clubhouses, right?
exactly. I mean, it's constantly changing and it's moving very fast. So, last summer everything was pretty much frozen, but by fall we were, just for example, I'll just give you the kind of the progression of our pipeline, just to give you an idea of the kind of stuff that we were looking at and what we're looking at today. So the progression of the pipeline was, last summer there wasn't much to do, but a number of, hotel loan sales started to come out. And we bid on a handful of them. And even from the early days of the hotel loan sales, it was very clear that there were tons of bidders
Mm-hmm.
on every hotel loan, and that unless a certain price point was hit, depending on the hotel, as long as it was viable, mid 80s to upper 80s, it was going to sell for a pretty strong number, and that just continued to strengthen over time. And so we bid on hotel loans, call it from September through December. And then, in December, there was a hotel loan, I remember, where we bid, 90 cents on the dollar, and we lost. And I was like, all right, this is not even worth our
Wow.
time anymore. So we just stopped
Wow.
doing that. And I don't even think they're coming out anymore, because at this point, I think they're actually
No,
getting refinanced, or the properties are getting sold.
above
And
par.
the properties are getting sold for numbers that were basically no discount to last year if you own a good hotel.
It's really crazy. We took out, as you know, a note on the Holiday Inn in El Monte. And we got a bunch of bids in, probably 5 or 6 bids on a pretty exhaustive process. Probably had 100, maybe more CAs signed on it. And we got bids at roughly 75 to 80 cents on the dollar. Lender wanted par, didn't end up transacting. We found out a couple months after we ran our process that the property traded well above the note amount. I think probably like 80% higher than the note amount. There was still a pretty big impairment on the equity. It was a $20 million note, and the property traded for $28 million. And the cost basis was significantly higher than that. But, it was, again, well above the note basis. So it's sort of exactly the phenomenon that you described.
Yeah, exactly. So, so the hotel, it's just a good example, because the credit markets moved very fast from, I mean, honestly, the credit markets moved from, hotel loans being sold, although they were sold into a very liquid market, to no longer being sold because they were being refinanced, to you can get a hotel